Greetings traders, Jason here with swinghigh.com. It is Tuesday, December 8th, 2009. This is your post-market analysis. The markets were down big today. There are a few things that came out that definitely helped to push stocks lower. One of those was the fact that we had two retail sales numbers come out this morning that were not very good. So there's a negative surprise there. We also had the dollar showing some strength. Here's UUP, which is the dollar tracking ETF, up 0.5%. And we had gold. If you remember in my halftime report, not much was going on with gold. It was down about 0.2%. And right after, it just crashed and finished down almost 2%. So a big drop in gold, some strength in the dollar, bad retail numbers, and that combined for a bad day for stocks. Let's take a run around the markets. We have SPY here. Here's the intraday action. We put in a short-term bottom at 109.40 after a big gap down and a sell-off. Came up here around my halftime report. We were messing around with the 110 mark, if you will. We broke above it, then came back below it. Then it acted as resistance again, and we sold off from there. Found support at the intraday low again, not the intraday low really, but this swing low in the beginning of the session. And then just sort of stayed under the 110 mark, which was a crucial resistance line on a broader time frame. So SPY, or the S&P, down 1.1%. The diamonds down 1.1% about. The NASDAQ down 0.6%, the financials down 0.9%, and the Russell is down 0.8%. So the Russell's, financials, and NASDAQ, which are our leading indexes, definitely showed some relative strength today. They were down, but much less than the NASDAQ and the Dow. So while we did see some weakness in stocks, that is a positive sign to see those leading indexes show some strength compared to the Dow and the S&P. Let's look at the tick, TRIN, and VIX. Here's the tick. Much of it was actually bullish. The tick measures which way stocks are going, and that bullish read comes from the fact that we spent a lot of the day trying to fight back after a big gap down and a sell-off in the beginning of the session. So because we were trying to fight back most of the time, stocks were trying to push higher. That leads the tick reading to be bullish, even though we had quite a bearish day. Here's the TRIN. Very, very bearish on the TRIN. As you can see, these red lines are my ranges. Between 1.2 and 1.5 is a comfortably bearish range, and we were at 2 for most of the day, so we were completely out of the range. Definitely an overly bearish reading on the TRIN. It's not as extreme as some numbers we've seen, but it's definitely important to note how extreme the volume was going into stocks on the decline. Because that was such an extreme reading, I want to look at the TRIN Q, which is just even more confusing now because the TRIN Q was in bullish range all day and in fact closed in bullish territory. So technology stocks, there was more volume flowing into stocks on the rise than on the decline. Finally, we'll look at the VIX. Yesterday the VIX popped 4%, which was an ominous sign. I mentioned that in the halftime report. And today the VIX popped 7%. So it's a big move up in the VIX, definitely confirming the move down in stocks. Tomorrow we have a couple economic reports coming out, nothing too major. Here's a quick look at the economic calendar from Bloomberg. As you can see, there's nothing too important coming out. The wholesale trade and petroleum status report are something to look for. Watch those numbers. They could move the markets, but they're not going to be big market movers. At least I don't expect them to be. Thanks for being a part of swinghigh.com. I'll talk to you tomorrow.